Good morning. Welcome to Stock Market Today. It's Friday, October 11th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today, brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where you can get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were higher in Thursday's trading, though they did finish off the best levels of the day. It was the cyclicals really that led the way. Energy, financials, and materials were the leaders, while defensive sectors lagged. Treasuries saw sizable losses across the curve, though they did finish off their worst levels of the session. Dollar was weaker versus the euro and stronger on the yen cross, as you would expect in kind of a risk-on type trading environment. Gold down 80 basis points on the day. WTI crude ended up 1.8% on an OPEC report, as well as trade optimism. And as we get to the desk here this morning, futures are up about 1% in pre-market trading, and that follows rallies across Asia and Europe. S&P looking to break a 3-week streak of declines, seeing some positive signals out of the ongoing U.S.-China trade talks. Dollar is a bit weaker against the euro, stronger against the yen. Treasuries are weaker with some curve flattening. Gold down another 80 basis points here this morning, and WTI crude adding on, up 1.3%. Upbeat trade sentiment, also explosions on an Iranian tanker, sending crude oil higher on the day. As we look at the S&P 500 here, two-day rally as trade continues to drive short-term market movements. Now, we do have key support in the area of the 200-day moving average, which continues to trend higher. It's at 28.50 now, so up 2 points from where it was yesterday. Key area remains the August lows near 28.20. I think that is the level. If we break that level, we complete a double top reversal pattern, which would argue for further downside. That pattern is about 200 points wide. However, if we continue to hold above that level and ultimately break topside, well, that pattern is still 200 points wide. Resistance is in the area between 29.50 and 3,000, and it is being tested here this morning in futures trading. RSI is holding bullish ranges, closed yesterday at 48.35, so still above that 40 mark, which marks the lower bound of bullish ranges for that indicator. Chaikin money flow dips to a bearish reading ever so slightly, but we'll see. Strong day yesterday. If we can get some follow through here today, maybe it's a short-lived trip below the zero line for Chaikin money flow. Either way, we'll be watching closely. Our market in a minute now. What am I writing about? My note to Chaikin Analytics clients today. Well, optimism around trade pushes stocks higher for a second day. We hit on that. This is the big one for me. Semiconductors break above relative resistance. You know the importance I place on semiconductors, especially their relative performance against the market. There's a high degree of correlation between semiconductor relative strength and the direction of the overall market. When semis are outperforming, that's generally a bullish sign for the market. And it's been one of the key tells for me over the past few weeks. Well, we are starting to see topside breakout. Small caps are actually testing relative support at recent lows, testing absolute support as well. Kind of an interesting dynamic at play. And one of the features that I'm seeing is that momentum in defensive positioning is showing signs of waning, right? Every Friday, we look at key themes and relationships in the market. A lot of it has to do with, are investors aggressive or are they defensive, right? For the past few weeks, past few months, really, it's been defensive in nature. The trends have favored defensive positioning, and that's worked out in the marketplace as the defensive sectors, groups like utilities, real estate, and staples have been outperforming. But now I'm starting to see some signs that downside momentum may be waning. We'll take a look at what that means a little bit later in the show. As I said, futures point to a higher open here today. Looking at the power bars now. For the major indices, Dow up 60 basis points, but no real improvement on the power bar. 2 bulls to 7 bears. S&P 500 up 68 bips, 75 bulls to 108 bears. NASDAQ up 75 basis points, 76 basis points, call it. 18 bulls to 22 bears. Small caps underperformed once again. They were up 43 basis points, but they were up less than the broader averages. 471 bulls, 399 bears, but we're going to take a look at small caps a little bit later on in the show. Big move lower in bonds. Down about 1.5% in price, sending yields lower. And energy was the standout group yesterday, up 1.29%. 2 bullish or very bullish stocks in that group, though, for 17 bearish or very bearish stocks. According to the Chaikin Power Bar, small cap stocks more bullish than large cap stocks. Major markets are mixed. Let's look at our stock of the day now. And this is important because if we are truly seeing a shift in defensive positioning, it stands to reason that we'll start to see a move higher in yields. And if we start to see a move higher in yields as the 10-year tests support at the 1.5% level, that could be a tailwind for banks. So our stock of the day today, Carolina Financial Corp, CARO, closed at $34.96, up 1.25% yesterday. Very bullish rating due to very strong earnings performance, attractive financial metrics, strong price volume activity, positive expert activity. So the 20 factors give us our very bullish rating. Strong trend with the stock above long-term trend line. Industry is strong from a power bar perspective. However, Carolina Financial, is still an underperformer relative to the market, but I'm starting to see certain regional banks begin to outperform, and that's interesting to me. They could be maybe discounting higher rates. We're going to continue to watch rates, but a name like Carolina here, we want to add it to a bullish watch list because if this relative strength starts to improve, this name becomes interesting quickly because of the very bullish rating. Bullish money flow, right? Starting to build a base here. Solid support in the 32 to 34% area. The only thing that I'm waiting for is relative strength. I'm waiting for the market model to be in agreement. We're not there yet, but start to do your work. Look at the holdings in the bank ETFs. You're starting to see some of those names outperform. And if we get a tailwind of rising rates, those would be interesting names to focus on. Add CARO to your bullish watch list here today. Sector tracker, moving in the major sectors over the last 5 days. Quite an about face here, right? We went from all red 2 days ago to all green today, led by technology, and that is important. Technology, 20% plus weight in the S&P 500. If you're bullish on the market, you want to see tech doing well. Financials getting in gear here as rates move higher. That's a group that we're going to be watching closely because the fundamentals on the financials have been solid, right? If you look at the power bar ratio for XLF, it's been solidly bullish for a while, but the market and model have not been in agreement. If we can start to get some outperformance from the fins, there's scope for some major upside in a lot of those stocks. Discretionary comms round out the top four. Staples, industrials, healthcare, and materials are middle of the road here. And utilities and real estate drop towards the bottom, right? In another sign potentially of momentum into defensive areas of the market potentially waning. I say potentially because the trends are still in place. We're not there yet. But under the surface, some of the key indicators that we like to watch are starting to flash some signs that that downside momentum in risk off names could be waning. Energy, despite being positive over the last 5 days, still at the bottom of the list. Let's check out our industry in focus now. Cap market services. Over the past 6 months, the group has underperformed the S&P 500 by nearly 9%. Power bar ratio, which measures future potential, is weak. 9 bearish or very bearish stocks, 7 bullish or very bullish stocks, currently ranked number 11 of 21 subsectors that we look at, and some of the names, indicative names there, certainly that you want to avoid because of very bearish power gauge rating, Ares Management, ARES, Invesco, IVZ, and FactSet Research, FDS, right? All very bearish ratings. I would also point out that this group has come under a lot of pressure because the online brokers are in there. You can see the waterfall type cascading lower, right, as the online brokers go to the zero commission model. But KCE is the fund that we use to track this group. It does have a neutral ETF rating, but the trend is weak below a declining long-term trend line. You can see the group has been an underperformer, steadily underperforming since June, and the intensity of that underperformance picking up of late with that fall off in the online brokers. Now, the fund is oversold. It's kind of trying to build some support here in the $50, $52 area, but shaky money flow remains bearish. Hard for me to get super excited about this group at this time. But, big but, if rates start to move higher, we'd expect to see this group start to perk up. So keep an eye on the power bar ratio, see if we start to get a bullish skew, and see if we can start to see an improvement in relative strength. Not there yet, but these are the data points that we want to watch to try to catch emerging trends as early as possible. Looking at what's trending now, S&P 500 gainers and losers are movers and shakers. We're going to talk about semis in a little bit. Skyworks and Qorvo both up as they caught upgrades from Cowen. Skyworks up 5%, Qorvo up 4.75%. Netflix rebounding after Goldman Sachs reiterating its bullish rating, though they did cut their price target pretty substantially. FCX, Freeport McMoran, caught an upgrade, send that stock higher by 4.8%. No real news on Mattel. That stock higher up 4.2%. Nectar, NKTR, this one's all over the place. Ends up on both sides of this screen many days during the week on the lower bound here as it hit a new 52-week low. NetApp, NTAP, downgraded to sell at Goldman Sachs yesterday, sent that stock lower by 3% in an up tape. Kroger downgraded at Jefferies, sends that stock lower by 2.8% in an uptake. At HRL had their analyst day. Investors came away from that analyst day feeling not too excited. Stock down 2.73%. We do have a very bearish rating there. No real news on DD to send the stock lower by 2.5%. Let's look at it. Here's the chart that is on my mind most days. Semiconductors, right? On an absolute basis, semis remain in a solid uptrend, right? A little bit of a consolidation within the context of that uptrend, but above a rising 200-day moving average as the RSI holds in bullish ranges. So bullish momentum behind an uptrend in the absolute price of semiconductors, right? But here's the kicker. On a relative basis, SMH against the SPY, starting to break topside through this downtrend line. If semiconductors are breaking out relative to the market, that is a positive sign for the market, as I said. High degree of correlation between the relative relationship between semis and SPY and the direction of SPY itself. And I think this bodes well, just bigger picture as well, because semiconductors are so pervasive in our lives and in the products that we use each and every day. I view semis as a barometer on the economy. The way that people used to use, or investors and analysts used to use copper as a barometer on the economy, I think looking at semiconductors in the same regard is important, especially that relative performance. If semis are outperforming, probably pays to be bullish on the market. And to the extent that semis continue to outperform, greatly increases the odds that the S&P 500 is going to break topside. Is it guaranteed to happen? No, but are the odds greater now? Absolutely. Keep an eye on this ratio. It's one that I watch every day. You hear me talk about it a lot. Maybe it gets starts to sound a little table pounding, but I do believe it's that important. Small caps, another area of the market that if it turns here would be a signal of less defensive positioning. And we'll see here what I'm talking about with momentum waning, right? Here's IWM relative to the SPY. Clear downtrend, but now testing support at the recent lows, right? Still below the 200-day moving average, but support at the recent lows being tested. And what's interesting to me is that it's being tested while the RSI is making a higher low. This is what I mean when I say downside momentum to these risk off type themes may be waning, right? Because if we can hold support here and mark a higher low on the RSI, that would leave a bullish divergence in place and set the stage for small caps to begin to outperform. And that if we got a level of confirmation, we can start to change our view on small caps, right? For a long time, we have said for equity exposure, we favor large caps over small caps. And that's clearly been the right call, right? This line is heading lower. Small caps have been underperforming large caps. But we are trying to find the shifts as early as possible. And this is one of the data points that we look at right here. Do we see a bullish divergence? And all the more important because it's playing out as IWM on an absolute basis holds above support at the 145 mark that we've been highlighting. Keep an eye on small caps here. And finally, another sign that momentum in defensive trades could be fading is high yield relative to treasuries, right? Big downtrend as investors have skewed risk off, right? High yield's been underperforming treasuries below a declining 200-day moving average. But as we pull back here to test support, similar dynamic at play. Notice that this most recent move lower, RSI of the ratio did not become oversold. Right? Downside momentum in defensive trades could be waning. We're watching closely. It's early days. Obviously, a lot more work to do, but something to keep in mind because if this ratio starts to work higher, greatly increases the odds that 2820 holds and we break topside to new highs for the S&P 500. That is going to wrap it up for today. Head over to shakenanalytics.com/today to sign up for that email. I want to thank you all for spending time with me every morning. I hope you have a great weekend. I will be back on Monday.